What is up, you guys? Welcome back to the channel 10 Baggers. So there's a lot of drama in the markets lately, especially around Clover Health. So 2 days after I made my video on my bull thesis for Clover, Hindenburg, a very famous publisher of short seller articles, posted a sort of a hit piece on Clover. And so this video is just going to address that drama and see what I think about it, and connect sort of with my viewers too to see what they think about it. I added to my position when the stock dropped as a result of the short attack, and I still am a very strong believer in the company's prospects long term and their ability to grow the share price long term, obviously. So let me know what you think in the comments about Clover. Don't be afraid to like and subscribe, and yeah, let's just jump into the video. What's up, guys? So I just wanted to make a video about Clover Health, as Hindenburg Research posted an article outlining some risks to the business, and the stock price plummeted about 10% on Thursday? Yeah, Thursday morning. So in short, to address the title of the video, hell no, I'm not selling a single share. In fact, I increased my position by about a third, under $12 a share this morning. And in this video, I just want to discuss the article and see if their bear case holds any weight. Obviously, I'm not a financial advisor, so I mean, very smart people think this stock is a fraudulent company and has like a lot of risks, and are telling investors to stay away from it. So take everything I say with a grain of salt. That being said, I have a very big position in Clover, and that's where my bias lies. Okay, so the first and probably most alarming fact brought about by the Hindenburg article is the fact that Chamath skips leg day and has a cliche shoulder tattoo. I'm just kidding. All right, let's get serious here. Okay, admittedly, after reading the article, anybody would start to worry about investing in CLOV. I'm just going to go through the different parts of the article so we can all stay on the same page. I'm going to break the video down into a few parts. First, the personal attacks on individuals involved, namely the CEO and Chamath. Second, anecdotal evidence questioning the effectiveness of the product. And third, real hard evidence against the ability for this company to grow long term. Then I'm going to discuss the possible motives of the piece and address the rebuttal filed through the SEC by CLOV. Okay, so let's start with the personal attacks. The article goes hard on CEO and founder Vivek Garipalli, even going as far to call him out for buying an $11 million Hamptons house and pointing out that his father was charged with fraud. Well, when it comes to the house, I mean, it's obvious that they're just like jealous. And then, okay, you're trying to say that he comes from a questionable family. I don't necessarily think that what his father has done has anything to do with him. Just a disclaimer here, Vivek did invite me to a sick party this summer at his Hamptons house, so obviously you know where my bias lies. But then, then this is also like insider trading, so that's good for you guys. But for real, everybody knows that if you can't really prove something with facts, the next step to sort of sweeten the story is to slander people's names. This concept is honestly the premise of Trump's 2016 election campaign, and it worked wonders for him. I'm hoping it's not as effective for the CLOV short sellers here. So with that in mind, I'm going to overlook anything about the CEO's personal character, because quite frankly, every other CEO in America is shady as shit, and honestly, it is probably better to be a ruthless moneymaker who bends the rules to get what they want. See how that type of stuff turned out for Amazon and Facebook investors. Bezos and Zuckerberg aren't exactly like the best citizens. Anything said about Chamath in the article I just can't get behind. I don't think that Chamath would risk his entire career, a career that he himself said he intends to last into his 90s, on just his third SPAC. Forget about his 20% stake in the company. Above all, Chamath cares about his brand, and he's not willing to risk that brand on a fraudulent company that he doesn't believe will create shareholder value in the long run. Not only shareholder value, value to the general public. I'm willing to listen to some of the other risk factors associated with the company because in truth, some growth companies do become duds and they don't get a good return on investment. But I'm not going to buy into the personal smearing that occurred in this report. Again, I just don't see Chamath not making sure all his bases were covered. I don't see him bringing something to market for short-sighted returns. The man has the potential to go down as probably one of the best tech investors of our generation, if not the best. And he's not going to just bring something to market through SPAC just to do it, just to make money. So now let's go into the anecdotal evidence. This article quotes a few doctors and nurses on their dislike of the product and accuses Clover of upcoding in order to increase income for each hospital visit. The upcoding is a major issue. It's going to be very difficult to prove. But the anecdotal evidence from the doctors, it's kind of like, the way I see it is kind of like, people don't like to learn new software or new job tasks, even if they can solve a lot of other issues for you. Most people like to just go with the status quo, and of course they're going to be a little upset when they have to figure out a new interface out of nowhere, for seemingly no reason. And I think we can all see this in all of our careers. We all have older coworkers who have been doing something a certain way for very long, and then when better ideas come along, they're definitely slow to adapt. I think that we definitely need a larger pool of medical professionals from different age groups surveyed to understand how the software is generally received in that career. Again, nobody really wants to learn new software or administrative tasks when they've been doing something one way for so long. I imagine any negative anecdotal review from medical professionals would largely come from this sort of sentiment, which is, not a desire to have to deal with new administrative tasks. Obviously, that's still concerning. I'm not saying it's a totally null point. It's concerning that some people don't like it. I mean, if I'm going to put 30% of my net worth in a company, I would love for everybody to love it. But I mean, for the basis of a short article, you're going to talk about 5 opinions from doctors. Like, I just don't think that's powerful enough to affect $100 billion worth of market cap on a Thursday morning. And then so there's some factual evidence that the article brings forward about sort of their growth prospects and growth tactics. So I actually think that Hindenburg admits that the growth opportunity for CLOV in terms of the total addressable market is massive. But they definitely call out Clover on some unscrupulous sort of growth tactics to fuel their growth. One of the things they mention is giving doctors gift cards to quote unquote boost morale. This is obviously frowned upon, and I believe the company was fined for something along this vein, about $100,000. The reason why this is most concerning to investors is because, the major sort of value proposition for Clover is that they're going to grow very fast. And if they're not able to use their growth tactics to meet that growth, their expected growth, it's going to be reflected in their share price. If the article totally focused on Clover's inability to grow as a business, then I would be more concerned. I'm less concerned because they brought in anecdotal evidence and sort of a personal smear campaign. This is the real issue. If Clover cannot grow quickly, which my thesis is that they're going to grow exponentially over the next 5 years, but if they cannot grow very quickly, they're not going to become a profitable business. So questioning Clover's ability to grow is the easiest way to refute them as a good investment. What's funny here is that the article does basically admit that Clover is operating with a huge market, like I said, and is a growing company, a quickly growing company. They say sporadically growing, but that's how signups for Medicare go. It happens sporadically. It's also important to note that although they spent months and months of research and presumably a lot of money on this research, they decided against starting a short position in the stock, which means that they're either so nervous that the stock price is going to be run up by Wall Street bets or FinTwitter or whatever, or they don't think the price is going to go down much more, and they're just writing a hit piece to make investors aware of things they don't like about the company. So the fact that they did not start a short position, my conclusion is that they think the stock price is going to go up, or at least stay the same, because you have to, if it stays the same, you're not going to make money on a short. I don't care if the stock price stays the same. I obviously am down on my position a little bit right now, not very much, considering the price action today, but like, if you think it's such a bad company and you're going to spend 4 months of your life researching it, put your money where your mouth is. Short the damn stock. And they didn't do it. So the fact that they're not shorting it brings me to question their motivation for even publishing this piece, which I'm going to talk about now. But first, I want to put some respect on Wall Street Bet's name. I'm going to post some solid DD that was posted there on why Hindenburg's article is quote-unquote ignorant bullshit. And I will also put the images I screenshotted from that DD to some classy lo-fi beats in the background. Okay, now I want to discuss the possible motives of the article. Why are they publishing this article? I just really don't get it. Are they trying to protect investors? Honestly, for some reason, I just do not think that they're that altruistic. Are they trying to expose Chamath and Clover CEO as some kind of crooks? Maybe, but what personal vendetta does Hindenburg have against Chamath and gang? Maybe they're just trying to get famous from taking shots at exposing fraudulent companies. When they expose one, they can always look back on it in 20 years and say, hey, we did that. That could be it. I'm not big on conspiracy theories in general, but to me, honestly, this piece feels like an orchestrated hit piece that was paid for by hedge funds who are upset at Chamath and want to hurt his image and his wallet in some way. Why would Wall Street be upset at him? Well, he did embolden the retail investors during the GameStop squeeze against Wall Street, and he has disrupted the IPO process by making SPACs popular, a process by which was largely controlled by massive investment banks in Wall Street, a process by which they were able to not only make a ton of money on the process of bringing the company to IPO, but also make a ton of money flipping shares to the public at high prices and then buying them back low after the IPOs went down. Calling into question the legitimacy of not only Chamath's SPAC processes, but you would be calling into question all of the SPAC processes, and this would shift power back to traditional IPOs, where, quote unquote, you can be safe knowing that JP Morgan brought, Snowflake to market or whatever. Yeah, I'm not buying, I'm not buying that. I can say one thing for sure about this hit piece. A lot of smart money loaded shares of Clover in the hours after the Hindenburg piece was published. I'm sure a lot of retail dropped their shares, put up their hands, and said, I'm done with this shit. I can tell you right now, a lot of hedge funds on the other side of this trade were buying a lot of shares today. And then, I think that's probably the most likely person behind this is some kind of hedge fund trying to do a hit piece on Chamath and hurt his wallet somehow. The other possible client of Hindenburg is a legacy insurance provider who sees the grip on their market weakening as a hyper-growth insurtech companies steal market share from them. I mean, that's a possibility. I don't really think that's likely. I mean, what's even better about this whole situation is that Clover published their own rebuttal to the piece. I would have almost rather them just ignore it and let growth numbers speak for themselves, but they decided to publish a piece through the SEC and to address all the questions Hindenburg had for them. In this piece, which I'm going to link in the description, this is honestly better than reality TV drama, I have to say.
Talk to you. As a friend, you should be able to talk to her.
Really? As a friend, she should be able to talk to me.
You. Yeah, because you're a knife.
So the Clover Response just came out this morning, and it's very, very robust. They succinctly address every single one of Hindenburg's questions and basically refute them as misleading or simply as slander, which was my opinion when I first read it. There is not a single question that they that Hindenburg had, that was not addressed by Clover. What you're going to see from CNBC and other bashers in the media is that they're going to focus on the fact that they did not disclose a Department of Justice inquiry to investors during the SPAC process. Obviously, this is annoying when companies withhold information like that could affect, sentiment on the stock. But the truth is they're not required to disclose that. And all companies in this Medicare Advantage field are in constant contact with the Department of Justice. It's not necessarily a terrible thing. It's just they do business with the government. And there's some bureaucratic, bullshit they have to deal with. So I don't think the fact that they didn't disclose one DOJ inquiry is enough to make the stock crash as much as we've seen. I think a lot of the other points brought up in the Hindenburg article are just weak and slander, basically, and I don't agree with it. So my bull thesis on Clover remains the same. I think they will experience exponential growth in their user base in the coming years, thus increasing revenue and becoming a very profitable enterprise at scale. The company is operating in a very small segment of the market right now, geographically speaking, and as they expand into new